Hello everyone, Happy New Year, welcome to 2022. Let's see if it's any better than the last year, but in any event, this is another episode of my Road to $1 Million in Net Worth series where I'm documenting my progress, or lack thereof, every month in trying to reach $1 million in net worth by the time I'm 30 years old. Right now I'm 24. I'm also trying to reach $30,000 in passive income every single year so I can declare financial independence. I definitely want to take some time in this episode to reflect on what happened last year, since a lot of things did change in my career and my finances. I want to reflect on some of that and see maybe what direction we're heading in towards the new year. But before we do that, we might as well dive into the end of the year net worth numbers to see where I'm at now. As always, let's start with the good stuff, the assets. We're currently sitting on around the same amount of cash that we have been sitting on for a while. I prefer to invest most of this cash as it comes in into my stock portfolio, since I can always re-leverage that to throw it into real estate. And this also is not inclusive of my real estate reserves. So the reserves I have on all three of my properties, I kind of count as pre-expensed out, as though they've been spent, even though there is cash there. So always keep that in mind. I do have other cash besides this. I just don't count it as free cash when it comes to my net worth numbers. But otherwise, when it came to the stock market in December, my holdings were a bit volatile, but they didn't really fall much beyond what happened at the end of November. So I guess that's a good thing for my net worth numbers. Not such a good thing if I'm hunting for stock deals. But in any event, we're over $100,000 when it comes to stocks and securities, most of that being in my M1 Finance accounts. And only a small fraction of these holdings are in non-stocks, mainly this lending club account that's being wound up as things get paid back, moving money out of this since they've shut down the platform, but they've kind of grandfathered in anyone who still had holdings there. I was one of those people, so I'm liquidating that slowly but surely. And Fundrise, which is a REIT portfolio, so you can kind of count it as stocks, but it's sort of like a specialized sort of REIT program that they do. Pretty much everything else in this category is a stock of some sort, and you can always take a look at my taxable stock holdings if you go to the spreadsheet that I always include in the description below. There's a stock holdings taxable tab, and I also have a tax advantaged account if you want to see my special accounts like my IRAs, my HSA, my 401k. All of those holdings are in there if you want to see those. I did make a slight change with the Indianapolis property. It's not in the property value, but I'm counting the cash flow differently now because I feel like I have plenty of reserves for this to where I can start taking more cash flow than I was before. I was being very, very conservative as I built up a pretty substantial nest egg of prepaid expenses, if you will, that wasn't being reflected on my net worth. But now I'm gonna be counting more cash flow and adding more cash to my investable pile. I'll get back to that when we go over the passive income numbers. But in total, that leaves us with $732,076.10 in assets. And now on to liabilities. We did pay off our credit cards that we had built up a good bit for the holiday season and buying gifts and all that good stuff. That's pretty much all behind us now, which is great since you don't have a bunch of purchases typically slated in January. A lot of that comes in November and December, at least in my family. We're only 5 or 6 months away from finally being done with these tuition bills, since Emily Ann, my wife, will be finishing her graduate program come August. But before that, there's going to be a few more tuition bills. So looking forward to that being done. The last bill should be somewhere like June or late May. And speaking of May, the good old government has decided to keep the interest freeze on student loans going. So we keep kicking the can down the road further and further. There's no interest on these student loans, so there's not much use in paying them. If we have other debts we could pay down in the meantime, at least that's how I'm viewing it. We have our HELOC, for example. We're putting more money towards that, since you could always take money back out of that HELOC unless there's some random freeze on it, which would certainly be less than ideal, but I wouldn't call it likely. Either way, we have to be very careful with any amount of debt. And once Emily Ann starts working full time, I anticipate we're going to be putting a lot more money towards debt pay down. So these numbers should come down quite a bit once we get to that point. And that decision could change pretty quickly if interest rates start jumping anytime soon. But that leaves us with $621,592.77 in liabilities, which means our net worth has climbed to $110,483.33, which is an increase of just short of $9,000 on the month. Our debt ratio has decreased back below 85%, and our passive income has effectively increased up to $1,100 per month. And this is because of that change we made with the Indianapolis property. Now that it has plenty of reserves, so we'll be taking about $500 per month in cash flow from that property, and that's in addition to the $600 per month that we're taking from our former primary residence that we moved out of this summer. I've decided to just stop counting dividends. I was accounting for $100 or $200 per month in dividends coming in, but since I'm reinvesting all of those anyways, it just doesn't make a lot of sense to count it towards our passive income, since I don't plan on using those anyways. Plus, dividends can fluctuate quite a bit, especially when they're paid out quarterly and not even monthly, so it's kind of awkward to account for that. And also in that spreadsheet linked below, you can take a look at my real estate holdings, and I break down each property by purchase price, the current approximate value, and then the rent and cash flow as well. All right, so it was a relatively strong month. We're up over $110,000 in net worth now compared to just breaking $100,000 last month. So we continue to make progress, and that's great. But like I said at the beginning of the video, I want to take a moment to reflect on last year because a lot of changes did happen. Just at the very beginning of the year, I finished law school. That was really at the tail end of 2020. Graduated law school, started studying for the bar exam, which really took up the whole first quarter of the year or so, and I took the bar exam in late February. But before I did that, while I was waiting for my bar results, I started working part-time at the law firm that I'm currently at now. I was working as a clerk while I was waiting for those bar results because I couldn't actually practice law officially. Once I got those results, I passed, and by June of 2021, I officially was practicing law as a commercial real estate attorney. It's at a large firm with an office in Chicago, and so far it's been a good experience, albeit stressful at times, but I'm learning a lot and it's been really good. If you're interested in learning more about my legal career, both in law school and now in big law, I do have some videos specifically going over that in the channel, so go ahead and check that out. I have a whole playlist. I think it's called Law School Legal Career. Go ahead and check that out. So everything's been going well on the career front, but what about everything else? Well, also this year, we ended up buying a new house. So that adds a third property to the portfolio, and this was a relatively big move in itself. This was a property that I bought at $285,000. This was the biggest property I'd ever bought in dollar terms, and also I believe in square footage, though I think the Indianapolis property has more square feet, but it was a lot less in purchase price. So it was a relatively big purchase. It was using owner-occupied financing, which made the deal a lot better because you're taking advantage of such awesome terms, because I'm going to be moving out of this property at some point in the next year, but I'm getting ahead of myself. The deal on paper looked great and it still looks quite good, but one problem I definitely overlooked when I was buying the property was the sewer pipe issue that I've documented quite a bit on this channel that caused $10,000 or so, more like $12,000 of damage that I had to repair. And that was super annoying because it flooded this whole basement that I'm filming from right now. Everything's all fixed now. And this basically took up a month or a month and a half of the year since I spent a lot of time and energy and quite a bit of money in fixing this. It was a huge distraction, especially because I was living in the property. It's not as though it was a rental, kind of out of sight, out of mind, just throw some money at it and be done. I was literally living in it, and that was quite annoying. But in the grand scheme of things, I think that was pretty much the biggest negative of the year. And really, that's not all that bad. I just had to throw some money at a problem. I certainly learned something in the process and won't make similar mistakes in the future. At least I shouldn't. But otherwise, it didn't really have a lot of setbacks, especially now that I'm working full-time and have real income coming in as opposed to working part-time, trying to find ways to make money while in law school. It was a lot harder to do than when I can just focus on an actual career full-time. And over the last year, I was able to grow my net worth to over $100,000, which is a nice little milestone. And since last January 1st, we gained about $39,000 in net worth, which is a nice boost considering the fact that a lot of the year was spent doing bar prep. And during that time, we were both focusing on school. My wife is still focusing on school and will be done soon. But the fact remains, we were able to make significant progress even with those restraints. Another milestone, which I mentioned earlier in the episode, is that my stock portfolio was right around $100,000, which is a pretty large increase compared to just a couple of years ago, seeing as though it was almost nothing at that point. And I've really consolidated that portfolio into a much more focused, concentrated approach using value investing principles, which I've really worked on over the last year and a half especially. I've really tried to focus on my strategy, and I'm still learning every day, of course, but I really feel like I've kind of carved out my own niche with investing. And I'm not implying that I own the niche. Lots of people do a very similar sort of approach to stock investing, but it's one that I have now taken on. And another milestone I also mentioned earlier is the fact that I'm now over $1,000 per month in monthly passive income. And I think this is probably the most important milestone because this is really the freedom number. The more income I can produce from my investments that I can actually live off of, the greater safety net I have if something were to happen. I have that safety net built in to some extent because I have now $1,000 coming in. It's still quite a ways from financial independence, and inflation keeps kicking that number higher and higher, I suppose. But it's good to see that we're making significant progress in that category in particular. My net worth number could be double or triple what I'm actually targeting, but if my passive income is less than my current expenses, am I really financially independent? That's something I'm going to continue to really focus on in the next year. And when it comes to this next year, I do have a few specific goals that I'm going to be going for. One of them is buying 2 properties at the very least. It kind of depends on the size of the properties, but I think having one in each half of the year at the very least should be very doable. Really 3 properties is probably a better target since we'll have our primary residence, and I think 2 standalone rental properties of some sort should be very achievable and would be a very great step towards my financial goals. And I do want to keep my foot on the accelerator when it comes to buying real estate deals, since that will force me to think more creatively and try to find deals that might not otherwise be easy to find if I was just coming in with cash, because maybe I don't have all the cash cash and I have to find ways to bring in partners or use some sort of crazy debt magic. Using that debt responsibly, of course, and not suggesting anything reckless, but in any event, trying to find a creative strategy to get the property if it otherwise wouldn't be easy to because I don't have enough cash to just buy it outright. That doesn't mean I'm gonna force a purchase, but I think I get the idea. Another goal I have for the next year is to double my net worth, so that would get me over $200,000 and would start getting me back on pace towards that $1 million by the time I'm 30, since I'm kind of well behind the pace line right now, but I expect it to be exponential as my portfolio grows, the returns will grow, the risk will grow too, since there's always a chance those things could go down, but that's par for the course. And the only way to do that is to have the vast majority of our income every single month going towards paying down debt or buying assets. So we'll continue focusing on that. And lastly, as a more general goal, I want to keep growing the YouTube channel and finding new opportunities to connect with other creators, to create new types of content, to improve my content. I think things have come quite a long way since my early videos. My equipment has improved, my delivery I think has improved. Maybe you disagree, but I feel like I'm getting more comfortable with talking about certain things and learning about things, since that's really the whole point of this channel. I'm trying to share my journey and also the things I'm learning and think that are interesting. That's really the whole purpose. And I appreciate every single one of you who spends the time to watch my videos, to smash that like button, to subscribe. I very much appreciate all of you. Speaking of which, if you haven't already, please hit that like button, as that would help the channel out a lot. But otherwise, Happy New Year to you and your families, and until next time, take care.